Hello. Today we're going to talk about the audit exemption for private limited companies in Singapore. Unlike Hong Kong, where an audit is required for all private limited companies unless they're dormant, Singapore has an exemption. This exemption is quite similar to other jurisdictions such as Australia and to Hong Kong. And in simple terms, the 2014 amendment of the Companies Act updated the definitions of this. And the key here are small companies and small groups. Those are whom are exempt. One important thing to think about before you apply for the audit exemption is make sure you're not breaching any other external agreements. So if you've agreed under your shareholders agreement to have an audit, for example, or under some debt agreements with a bank. So the decision steps for the audit exemption. First of all, make sure that you are a private limited company. This doesn't apply to public companies. And you need to tick off at least two of the following three items. So your annual revenue is less than 10 million Singapore, or your total assets owned is less than 10 million Singapore. That's gross assets. That's not assets, that's liabilities. And then finally, the other one that is your two of three to tick off is your total employees is less than 50. And that's 50 full-time equivalents. If you're part of a group, even if that group includes overseas entities, then the group as a whole must meet two of the above conditions. That in a group situation might be quite hard, but if you're a small startup who's maybe got a Hong Kong entity and a Singapore entity, then generally you probably will meet the terms of being a small company and a small group. Ongoing compliance, well, unaudited accounts are still required to be filed with ACRA as per the normal schedule. All the other compliance items such as accounts, shareholders meetings, those all stay the same. You're just not providing audited accounts. You need to monitor the ongoing compliance with the requirements, the 10 million and the 50. And to continue to be a small company, or we could read group there as well, as long as you meet 2 out of 3 of the quantitative criteria for the immediate past 2 consecutive financial years, then once you stop meeting those in 2 consecutive financial years, you cease to be a small company as such. That's it. Very, very simple. This is a way of potentially saving some costings, but also consider that as a director, the comfort of having your accounts audited and knowing that your tax returns have some comfort in them and your GST filings, etc., may outweigh the cost saving. Also, debt agreements or new investors coming in, they may all want to see audited accounts as well. However, if you have an entity that is not doing very much in Singapore, then this is a definite way that you can reduce some costs. Thank you very much.